Right, good afternoon and welcome to the Educate Trade YouTube channel. If you haven't already done so, please feel free to subscribe. That way you'll be notified whenever we go live in the future. So let's have a look back over yesterday, first of all, to see the kind of rangy nothingness that's tended to symbolize what is pretty much always the quietest day of the month, the Monday after non-farm payrolls. And yeah, this could have been easily been a US holiday given the price action. So a bit of life in Europe. And then as we got to the US Open, moved to the point of control, tried to have a little squeeze down below the value lows. Didn't manage it for too long. Value high, value low, value high, value low. Had a little look out after 8 o'clock last night and then ended up back at the point of control. So yeah, a good lesson for traders who are maybe thinking that you're going to see the same sort of volatility every single day as a trader. Last week was a gift of a week. There was just bucket loads of news in terms of data releases, obviously central banks with their rate decisions, press conferences, loads and loads to get your teeth into. This week, however, the opposite is true. We're seeing very little in the way of data coming through this week. Yesterday was obviously a bit of a damp squib. We had the Aussie rates overnight, which weren't worth getting up for, so I'm pleased I didn't. Yeah, the only thing really to hang your hat on today is these central bank members. We've got Powell out at 5:40 this evening, so that could easily move markets again if he feels that he was slightly too dovish in his tones last week. This would be an opportunity for him to undo that. Quite frankly, I don't think that's true, or I don't think that's likely, should I say, given that from the start of the year, if you look at this kind of rally that we had as we were trading on Wednesday around the Fed, around here somewhere, we're kind of back at the same levels that we were. So if you wanted to be hawkish, given this rally that the stock market had in the first couple of weeks or first month of the year, then he had an opportunity to do that on Thursday and he didn't take it. So if you're hanging your hat on Powell to come out and try and flip this market, a mere 72 trading hours or so since he was last on the wires, then I don't think perhaps we're going to see it. But there are some reasons why I might look on the short side today, and we'll cover that slightly in a minute. So one of them is Kashkari. So one of the Fed members has been on the wires earlier this afternoon. He said that they may have to, the labour market is still looking too hot, as we are aware from the figures that we had on Friday last week. These blowout figures from the unemployment rate, first of all, but down at 3.4, but really the non-farm payrolls expecting nearly not even 200,000 and got over 500,000 jobs created. You can see we've had a couple of blowout numbers on this recently. We had nearly 700,000 back in March, over 500,000 in August. Things have kind of stabilized a little bit, but then another huge blowout number for the Jan figures that came out early in Feb. So yeah, really surprising heat in this job market. You'll notice with the gold line here being the forecast and the blue being the actual, that we've beaten on every single month all the way back to April last year was the last time we had a miss, and then a couple before that were pretty big beats as well. So yeah, very much underestimation by the economists on how strong the job market is. So yeah, that's one of the reasons to potentially be a little bit sheepish on stocks just now. When Kashkari's comments came out, the Nasdaq was trading, where are we, about 50 ticks higher. S&P's, it was around a quarter past, I think 16 minutes past one, and we're off about 12 ticks on the S&P, which is no small fry at this time of day. Leading into the open, we have just hit the value lows for the month on the S&P, value lows for the week on the Nasdaq, and yeah, we're not far off that high volume node for the month on the Dow Jones as well. So perhaps a little bit of support coming in, and I'll show you the order flows as well in a moment. But let's also have a look at what happened with one of the big components of the DAX today. Lint is what the largest component of the DAX, 10% of the index, or over 10%. Those figures were mixed in terms of EPS and revenue, one up, one down. But the stock market reaction after 10 minutes at least wasn't mixed. It was quite clear it was being sold off, and that created this kind of meltdown into 20 minutes later we were off quite nicely on the stock. It has since stabilized, but having said that, the DAX hasn't, and that's obviously followed on quite nicely with that Kashkari comments taking it through the lows. So yeah, interesting moves in the stock markets today. We also had decent figures from BP before the market opened this morning, and this is what we had on the open on the FTSE. So I think BP is up 5.5% now, Although these figures come out at 7 o'clock, and you could see a little bit of a volume spike at 7, often you get the real volatility at 8 o'clock when the cash market comes to play. And we saw that today. It was up for 30, 35 ticks in the first 20 minutes or so. And if you're doing this as a spread trade against the DAX, you'll see the DAX, both DAX here and the Euro stocks. If you were long FTSE and short DAX, you would have cleaned up on both sides of that trade. So that was something we were chatting about this morning on the Zoom. If you do want to join on our kind of daily Zooms that we do, the details for doing that are in the description below. So please reach out to us if you want to get this sort of content on a daily basis or twice a day. Do it just before the European markets open, and then again when the US market comes through. So I mentioned Powell is a big one to look out for tonight at 5:40. We also have some news releases from Microsoft. They have an announcement to make. Obviously, they've invested 10 billion, small, it wouldn't be worth their while, $10 billion, I think, into ChatGPT, the fantastic kind of script API, AI that we've all been having fun with over the past couple of months. And they're having an announcement rumored to be about how they're integrating it into their Bing search engine. Obviously, Bing has always been the ugly sister compared to Google. Perhaps this ChatGPT will enable Bing to be at least competitive in that marketplace. Obviously, a pretty good strong place to make money, but for very little effort, if you can do it, it's a hell of an advertising revenue that Google are getting. That's coming out, I think, at 6 p.m. UK time tonight. So do watch the Nasdaq. As we know, we've been talking about last week with the indices. Microsoft is a huge chunk of the Nasdaq, is 11.8%. So if you do get a big spike up in Microsoft and you don't like trading the individual stocks, then Nasdaq would be the place to look for volatility. You'll get a 10% jump in Microsoft. That would correlate to a 1.18 move higher in the Nasdaq. And you're looking at north of 100 ticks on there, or 120 ticks. That would be something to potentially look at around 6 o'clock if indeed the news that they release is significant. Something to bear in mind. We also have Google doing their announcement. They have their own AI that they're called Bard, I think, that's coming out. They have an announcement for it that's been kind of rushed forward because of this announcement from Microsoft today. They're doing theirs tomorrow night, so it could be a hell of an AI week this week. So that's something to bear in mind apart from the Powell news. A little bit more niche, but certainly an interesting place, the AI market. If you look at the AI ETFs this year, they have outperformed and some. So order flow. Let's talk about the book map. This is the current order book for the ES Mini. And you can see here we had early on in the day, we moved down towards this area of peak volume, peak liquidities. It currently got over 400 orders in around this price. Bounced from there, and then we ran into a little bit of resistance as some orders started to come in above. Things pushed the market lower. We then, obviously, that 116 or whatever it was, 115, we had the Kashkari news come out. That's driven the market back down, taken out these lows. So it's kind of at least on a stop run. But the trend is very clear here, and we're now starting to see it roll over again. But if you're going to zoom in a little bit on this, we can see where the big liquidity is around 10s, 41 10s. On the futures, these numbers will be slightly different from your spot markets if you are trading retail platforms. Often the spot market is obviously priced slightly differently, so do account for those differences. If you have a look at where the low was, we were around 10 and a half just before 20 past 2. So maybe recalibrate that with your lows on your platform to know where this 10s figure is. Similarly, we did have some orders creeping in above, but they seem to have moved away a little bit as well. There's not too much further out in the book yet until you get down to 90s on the S&P. And there were some earlier in the day which have since been removed. So this could be the area of interest around 90s if we do get a downside move. So talking about potential for these markets, there was one other thing I wanted to talk to you about, and that is the volume profile for the month on the Nasdaq. So we've obviously created this like double distribution for the month on the Nasdaq. Lots of volume traded down here, lots of volume traded in this range really since the Fed. And if these levels can give way, then the markets tend to accelerate incredibly quickly through these low volume periods. And we were talking about this on YouTube a couple of weeks ago with the Dow. And we're seeing a similar sort of setup here. So if you do see those lows from yesterday taken out, then there is a chance that we get some real washout in the Nasdaq today. We're looking at 320, maybe 366 lower to that point of control from earlier on in the month, which obviously shifted higher now. But if we need to kind of break these levels here, that might, along with the Kashkari news, might be enough to get it going. And whether it can do all of that before Powell comes out, I'd be surprised. And there is a level of support around here at 120, where are we, 12 to 86. So yeah, I might be scaling out of some at that stage anyway, ahead of Powell, in case he uses his silver tongue to get the market going once again. So let's take a look at the open. Dow has pre-open there. I see the Dow just took another little nosedive, tweaking the markets a little bit, but we are seeing some buyers start to come back through, albeit they've been short-lived so far. We've got the bonds, the T-note down towards its lows, or not far off them. Nasdaq is obviously not quite taking up the lows, but the Dow has been very much the underperformer of the US indices all year, really, and certainly the last couple of weeks. So that's something that you might want to bear in mind if you want to get on the short side. We don't have the same profile set up on the Dow because we've never got the rally in the same way on the Dow Jones. So if I flick to the Dow, you'll see that we're kind of still in that range from where that big spike was on the Fed. We've already traded back through it, so it is very much within the realms for the S&P 500 and the Nasdaq. But yeah, sadly not for the Dow. If you are trading that, you don't have this big volume gap that looks as if it would be hungry to fill if it can get down there. But yeah, worth taking a look at that as we go through the day. Back to the open, start taking out the low. So we're already starting on the back foot here, which is interesting as we have this line in the sand on the Dow. Sorry, on the Nasdaq at around 124.30. That might be where I look to see if there's some acceleration into the short side. But yeah, don't want to be kind of rushing stuff. It is still, we mentioned yesterday was a very, very quiet day. Don't get too far ahead of yourself if you can avoid it. The volatility will come at some stage, but don't expect it to be quite as dramatic as it was last time out. So if you have liked this, do like and share. And yeah, if you want to sign up with us, the details are in the description below. Good luck with your trading today, and we'll be back with you on YouTube at 2:20 on Thursday. But we'll see you all on Zoom, those clients out there.